Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, as well as the key levels for both the indices. We'll be also discussing on the key sectors in focus in trade today, as well as the next few trading sessions. First up, coming to the update in the global markets. So in trade yesterday, the US indices experienced heightened volatility. This as the Fed implemented its first 50 basis rate cut since 2020. Early in the session, both Dow and the S&P 500 hit new record highs, but following the Fed announcement, the market reversed course. The Nasdaq dropped by 0.45% while the Dow declined 0.25% and the S&P 500 closed down with a cut of 0.29%. Going ahead for the S&P 500, the zone of 5,570 will act as the immediate support. If it slips below the levels of 5,570, then the next support is placed at 5,520 levels. While on the upside, the zone of 5,690 will act as the immediate hurdle. Coming to Brent oil, so Brent oil dropped by over 1%, continuing its bearish trend as it trades below its short-term and long-term moving averages. Looking ahead, the zone of 73.8074 will act as an immediate resistance for Brent oil. Coming to the US dollar index, so the dollar index hit a low of 100 before staging a sharp recovery to close at 100.93. Going ahead, 101.50, 101.6 is expected to act as the immediate resistance for DXY. Coming to the Nifty view, so in trade yesterday, the benchmark index Nifty exhibited substantial volatility during the trading session. It achieved a fresh all-time high of 25,482 but failed to sustain at these higher levels, leading to profit booking. However, the index managed to recover slightly from the lower levels and closed at 25,377, resulting in a modest decline of 0.16%. The daily chart formed a high wave candlestick pattern suggesting market participants' indecisiveness at the current juncture. Going ahead, the zone of 25,500 will act as the immediate hurdle for the index. Any sustainable move above the levels of 25,500 will lead to a sharp upside rally towards the mark of 25,630, followed by 25,750 in the short term. On the downside, the zone of 25,250 is likely to act as the immediate support for the index. If the index slips below the mark of 25,250, the next support is placed at 25,100 levels. Coming to the option chain data, at the current juncture, 25,500 has significant call open interest, followed by 25,600. And on the put side, we have 25,400 which has substantial open interest, followed by 25,300 strike. Coming to the put call ratio, that is for today's expiry. For the weekly expiry, the PCR currently is at 0.89 and the max pain is as seen at 25,350, while for the monthly expiry, the PCR is at 1.44. Coming to the update regarding Bank Nifty, so despite experiencing minor profit booking at higher levels, the index managed to close at 52,750, registering a gain of 1.08%. The daily chart reflects this positive momentum with the formation of a substantial bullish candle, which indicative of bullish sentiment. Notably, the significant contribution to the performance came from heavyweight stocks with the index, particularly HDFC Bank and ICICI Bank. Their strong performance was instrumental in driving Bank Nifty outperformance relative to the broader markets yesterday. Going ahead, the zone of 53,100 will act as the immediate hurdle for the index. Any sustainable move above the levels of 53,100 will lead to a sharp upside rally up to the levels of 53,600, followed by 54,000. On the downside, if we see, the zone of 52,300 will act as the immediate support for the index. If the index slips below the mark of 52,300, the next support is placed at 51,900 levels. Coming to the key market indicators, so the volatility index India VIX surged by over 6% in trade yesterday. However, it is still trading below its short-term and long-term moving averages. Coming to the advanced decline ratio, the advanced decline ratio tilted in favor of the declining counters for the second consecutive trading session. Coming to the key sectors in focus, so Nifty Bank, Nifty Private Bank, Nifty Financial Services have strongly outperformed frontline indices on Wednesday. We believe that they are likely to continue their northward journey in the next couple of trading sessions. On Wednesday, if we see defensive sector stocks experience profit booking with Nifty IT index being the worst performer for the day. Notably, IT index slipped below its 20-day EMA for the first time in 23 trading sessions. This development suggests that the sector is likely to face selling pressure in the short term. Additionally, both Nifty Pharma and Nifty Healthcare indices also witnessed profit booking, contributing to the overall decline in defensive sector. Apart from this, Nifty Oil and Gas, Nifty PSC, Nifty CPSC, Nifty PSU Bank are likely to underperform in the short term. Coming to the FII DI data, both FIIs and DIs were net buyers yesterday to the tune of 1,153 and 152 crore respectively. That's a wrap of today's edition of the podcast. Thank you for watching. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.